Hello, my name's Stephen Hawkins.
I'm Ryan Swore.
I'm Blake Moore.
And I'm Neil Warren.
And we're analysts here at the Mass Student Investment Roundtable here at Stephen F. Austin State University. Traditional recommendations only cover stocks being bought or sold. However, we believe that we have identified a particular candidate that can be used for a short sale. American District Telegram, otherwise known as ADT. American District Telegram is a multi-service security company that was established in 1874. They specialize in home and business security. Over the last 140 years, this company has survived being acquired, trust-busted, and spun off until finally it was reintroduced as its own independent firm on the New York Stock Exchange in October 2012. Since then, this company has kept about 20% market share, but that's a far cry from its 80% back in 1964. This is because of the ever-growing number of regional and national providers, not to mention innovations in do-it-yourself home monitoring technologies. Here's a Porter's 5 analysis of ADT's competitive landscape. The bargaining power of producers is high. Multiple big name producers such as Honeywell, General Electric, and Concord and Ademco produce many alarms for them. But you can also bring your own system under their services as long as it's compatible. Bargaining power of consumers is at a medium. Even though they have millions of customers and only 400 licensed dealers, customers are not really organized on a massive scale to put a focused push on prices for them. But they do have a price point at $29.99. The threat of entrance is actually high because of the low barriers to entry. Actually, according to besthomesecuritycompany.com, 2 out of the 10 companies that are better than ADT in terms of products and services and a varium other criteria were started in the last 10 years. This, coupled with the amount of people switching over to do-it-yourself solutions for security, has their moat streaking quite a bit. The threat of substitution is actually quite high. Because of so many companies within their industry right now, there is actually relatively easy switch costs. One thing that is working for them is the fact that they do have 2 to 3 year minimum on their contracts. Putting all this together, it is no surprise that the competitive intensity of this industry is quite high. You can actually see the toll this is taking on the company because of its declining moat trend.
ADT is located in the industrial sector of the S&P 500. Some of the drivers of this sector include interest rates, GDP, and supply and demand. We do not believe that these will directly affect ADT, but some factors that we do believe that will affect ADT include: 1, the strengthening dollar could potentially cut into some of ADT's international revenues, as they have recently acquired a Canadian security company called Reliance Protectron. Also, since a good portion of ADT's revenues in the U.S. come from small businesses and new homeowners, the slowed construction in the U.S. could negatively affect their revenues also. Here are some metrics that are a snapshot of ADT's performance relative to the industrial sector of the S&P 500. ADT's PE ratio relative to this sector is overvalued. Their price to book is undervalued. However, their price to sales is equal to the sector average. Their ROA is below the sector average, and the same could be said for their ROE. Their debt to equity ratio and their PEG ratio are both higher than the sector average. Taking all these metrics into consideration, we believe that ADT is overvalued compared to the industrial sector of the S&P 500.
As mentioned earlier, growth of construction and real estate is a main driver in this industry. It is becoming easier for the average home buyer to have their own security and do-it-yourself system. This really affects ADT since they're primarily focused on home and business security systems. If you'll take notice at the ADT versus industry chart that we have provided, you'll notice that their debt to equity ratio is at 1.7 while the industry is at 1. Yet their ROE is at 9.4 and the industry is at 18.1. This is primarily due because their debt is increasing, yet their profits are decreasing. Now that we've gone over sector and industry versus the company, we have the valuation of the company more in depth coming up.
The analysis of ADT included PE valuation, technical analysis, cash flow ratios, financial health, in performance relative historical averages. The current PE is relatively overvalued relative to the historical average, while the forward PE is relatively undervalued to the historical average. Both of these PE ratios can be justified using the PEG ratio and the EPS growth. On the technical analysis, ADT has moderate momentum while having weak relative strength. As for cash flow ratios, the operating cash flow growth has been on a negative trend due to increasing interest expense and customer retention costs. As for free cash flow, it's also on a negative trend because of the operating cash flow and also an increase in investment cash flows with recent acquisitions. On the financial health, ADT has had an increase in debt to equity as well as financial leverage. This is due to a recent stock repurchase program as well as to fund their revolving line of credit. As a result of this, the company's liquidity has also been decreasing. In the first graph, you can see ADT's current PE is relatively higher than the historical average PE. We are going to determine if it is justified by fundamental company data. To form our opinion on ADT's PE, we'll be using Gordon's growth model. Within the model, we'll be looking at the discount rate and the growth rate. Within the discount rate, you look at total risk. Within total risk, ADT has operating leverage and financial leverage that is increasing over the last 3 years. With this increase, ADT's PE ratio should be decreasing. As for ADT's growth, it hasn't performed at its potential over this past year. Based on the Gordon growth model, we determined that ADT's PE ratio is overvalued because of the increase in total risk and insignificant growth. Because of that, ADT should have a decrease in stock price.
As with everything, there's always risk. The greatest risk with ADT is that the momentum will continue to rise and that the stock price will rise with it. But that being said, through our opinion and valuations, we feel like that ADT would be an excellent stock to short. We've actually come to the valuation that the stock should be approximately $30 in the next 3 to 12 months. Thank you for your time.